So we're here because there has been a significant amount of disinformation circulating in the ether, as it were. That's made it very difficult for a lot of people to understand what is at stake. Some people have argued, for instance, somebody have argued, for instance, what exactly is my issue, what exactly are the public interest issues, etc. Right. So this presentation will attempt to dispel the disinformation and then lay out very clearly how I got involved, etc. So the problem actually, or rather my involvement actually, starts a bit earlier than this particular incident. It starts with another very similar incident involving engineers and planners. Not too long ago, a few months ago, the government nationalized the Damine mine, which is one of the two main mines owned and operated by one of Ghana's largest gold companies. This company had a development agreement with the government, and typically there are stability clauses in these development agreements. That means that renewals of the leases have for a very long time been considered a formality. For the first time in a very long time, the government decided not to do a renewal and to nationalize, but it gave the company basically weeks.
Nationalize means take over.
Take over the company, but it gave the company literally weeks. And if you've seen a mine before, we're not talking about small infrastructure. Even the decommissioning so that you don't have environmental consequences take many, many months. So you can't give somebody weeks, and then on top of that, the government said national security to the mine. So this was a very bizarre and unusual incident. So I commented about it by writing what is going on. And as an someone say an offhand remark, I mentioned that this issue has optics problems because this particular company, whose mine had been nationalized, its main contractor was a company called Engineers and Planners. And that company has issues with the company. Some of those issues are commercial in nature, but they have resulted in Engineers and Planners having financial challenges. And therefore, if the government isn't careful in the way that it's going about, and it appears as if it's doing something unusual than what typically has been the case, many people could read meanings into it because of the involvement of engineers and planners, which nobody in this country disputes is politically connected.
You got sued for those comments.
Very good. So eventually I got sued. And when you get sued, you do research. As you know, you're a lawyer, right? So you do research to defend yourself. What had I been sued for saying? For saying that the decision by this company, whose mine had been nationalized, had led to financial challenges. There had been financial challenges at engineers and planners because that company had taken decisions, including suspension of mining services, for which EMP is paid to deliver, and therefore any such suspension will have had financial consequences for EMP, etc. So once you get sued and you are doing your research, you try to justify your case. So the issue was to look for evidence of financial challenges at EMP, which I had some evidence, but look for more evidence because you're doing a court defense. In that process, obviously, we started collecting information, but people also hear. So they bring you information, they leak documents to you, because everybody has grievances. Now, the question is that you have to be as a public interest researcher, very good at sifting through to see what are public interest issues, what are just related to your defense in court, etc. So I had found information related to this issue around Black Volta gold mine. Because if as it becomes apparent very soon, the dispute around Black Volta gold mine has already been ongoing for a while. So that information, now made available to me, in a way got into, escalated when then somebody else showed information to me suggesting that engineers and planners intended to do a launch event in which it will declare itself as having acquired the mine with money from EBID, which is a regional bank.
The ECOWAS Bank.
The ECOWAS Bank. So this was very intriguing because I know there's a dispute. I know there's an ongoing live dispute. So how would they organize an event at a hotel in Accra, invite all these dignitaries, and then proceed to announce that they've acquired the event? So that is how those issues, got to my attention and why I reacted publicly. So the first thing I did was to announce on social media that this is a big problem because this is a mine that is under dispute. Why this launch, therefore? The issues, though, regarding Black Volta are additionally complicated because there are significant public interest issues beyond just what I've just described, beyond my libel-related matters, my research in relation to the libel matters. In Ghana, the government always have shares in every mining company because, as you read in the very beginning, there's a determination for a very long time, in our jurisprudence that we needed to have a situation where the government had significant stakes in all mining activity. So the government would typically own maybe 10% of a particular license area, and the government will get royalties, etc., as well as dividends from the project. So every project in Ghana has some government interest. That's number one. Number two, the bank that was announced as the one that is financing this very important project is the ECOWAS Bank. The ECOWAS Bank is a public bank. It's a public bank to the extent that governments in this country, in this West African region, own shares in the bank. So Ghanaians are a shareholder in the ECOWAS Bank. On top of that, as we will prove very soon, the way the bank itself is structured is very political. All the board of governors are ministers in the region, so it's a political bank. It's also a policy bank. And then underneath them is a board of directors, and all of them are senior civil servants. So in Ghana, there's a gentleman at the Ministry of Finance called Mr. Akest, who is our representative on the board of directors. Every one of them is a senior civil servant. So the decisions that the board have taken, you cannot deny that if the board of directors of ECOWAS Bank has approved this, political exposure or political influence is possible. We are not saying that that is the determinative factor, but we're saying that because a political bank is a policy bank and its goal is not primarily profit but to spur development, we are interested in anything ECOWAS Bank does. We do evaluations for World Bank projects in Ghana, IFC, Afrexim Bank. These are all policy banks, and they are politically exposed. And for that reason, it doesn't make sense to argue that transactions involving the ECOWAS Bank are purely private. Lastly, we can also not deny, nobody can deny in this country, that Mr. Ibrahim Mahama, who was the 100% shareholder of Engineers and Planners, which was buying this mine or claiming to have bought this mine, is a person of extreme public interest. People have interest in his affairs because he himself is a political player in the country. It's not just because his brother is the president. If you actually know the politics of this country, you cannot deny that this is a person who regularly involves himself in the politics of this country, often quietly, but still substantially. So if a politically exposed person is buying a mine with money coming from a politically exposed bank, you have to have an interest. It's just impossible as a researcher in natural resources not to have an interest. On top of that, because of the issues in mining for a very long time, the whole world has agreed that mining cannot be treated like any other business. Yes, there are a lot of regulated businesses, banking, telecoms, even healthcare and education. But mining has led to conflict. It's led to so many problems. And those entanglements, blood diamonds, blood minerals, so many problems. Look at the Congo. Most of the wars in the Congo are due to its mineral resource and the way they are managed. So something called the Extractive Industries Transparency Initiative was created. And that initiative says that governments and companies cannot be the only ones at the table when we are discussing anything mining related. Civil society organizations must be at the table. That is the rule. And Ghana is a member of EITI. There are civil society organizations in this country who, because of that, have access to all information related to mining, every piece of information. Because mining is highly regulated, every decision around hiring, contracting suppliers to provide goods, every single detail is evaluated by regulators. And civil society organizations have a seat at that table. We have a right to request information. We have the right to look into information. It's actually the fact that sometimes we don't actually comply with our own obligations, that these matters become opaque. But other than that, there should be no opacity. So because civil society organizations have a definite interest in all mining and mineral-related activities globally, and Ghana is a signatory to this initiative, I, as a public interest researcher within the civil society movement, had absolute rights to get involved. Thirdly, Engineers and Planners itself, in its own statements, in its own submissions to the arbitration process in London, which I'll get to in a minute, in its own declamations in court in Ghana in relation to this issue, have made it very clear that this is a very politicized project. If you read the statement that they issued when I started commenting about this subject, they were very clear that it's the Minerals Commission itself that have given them a no objection letter to go ahead and take over the mine. Is the Minerals Commission a private organization? It's a state institution.
Correct.
On top of that, they've made it very clear that they will go ahead and acquire the mine, whether or not the shareholders agree. We will come to that in a minute. Now, if you live in a country where expropriation is not in our laws, we don't allow expropriation without compensation, except under very well-defined, on very well-defined grounds. For a private company to declare that because they have a no objection letter from the Minerals Commission, they will go ahead and do a transaction without the involvement of their shareholder, tells you that there's a political undertone. Because why would the government give me that no objection letter in the face of these disputes? All of that, therefore, means that it was very important that the fact that the ECOWAS Bank had come in, the ECOWAS Bank board chair is a Ghanaian. He has a history of working in the Ghanaian public sector. He used to be at ARB Apex quite a while ago. The current rotating chair of governors is our own finance minister, joined just a few months ago, took over just a few months ago. All the board members are his colleague politicians in the region. All the board of directors of the ECOWAS Bank are civil servants under the control of politicians. ECOWAS Bank does not have an independent governance body, an ombudsman like you see in other multilateral development banks that I can go and complain to if I have an issue. If I have an issue with the World Bank, there's the IEG group. We've been doing all manner of reviews about World Bank projects in Ghana, and I've written extensively, probably the person who has written the most about World Bank projects in a single country in the world. But we have information from every World Bank project because that's a requirement. ECOWAS Bank doesn't have that. So there's a lot of transparency issues when it comes to ECOWAS Bank and such a transaction. Therefore, we have an interest to make sure that underneath it, there aren't any political problems or political influence, etc. And that is why I got involved. So having explained in great detail why I got involved, we now get to some issues around the ECOWAS Bank decision to enter. ECOWAS Bank was entering, and I knew this for a fact, when it already had a history with the project. When in May 2024, it had given a term sheet. A term sheet is simply a high-level offer through EMP, which had then arrived at Azumah Resources, which owned the asset, offering to put money into the mine. And the shareholders of Azumah Resources had looked carefully at what had been offered and said it doesn't meet the terms of the agreement. So ECOWAS Bank had then gone and refined it the next month and brought another offer back, and the company had said no. So there was a history between this bank and this project. That's very important to bear in mind. We also know that long after that, and just before these matters exploded in the public limelight, and when this company, the shareholders, got wind of what was happening, they had written to ECOWAS Bank, telling ECOWAS Bank that they are not involved in any transaction and the rest of it. Now, if you have such live disputes, you have a history with the project and understand, therefore, that there is concern about the shareholders. You've dealt with shareholders telling you no before. Then you go behind them, work with the one trying to acquire the mine, fly into Ghana, stage a champagne-fueled event, issue public statements of your support, and then declare that the board of directors has approved the loan. For the board of directors to approve the loan, a number of very critical issues then arise. First, under the rules of the ECOWAS Bank, when you make an application for money, there are a lot of documents you need to submit. Those documents are to facilitate due diligence. Mining is a special category across the world in all banking jurisdictions, especially in the respect of multilateral development banks, such as ECOWAS Bank. Why? Because often the environmental, social, and governance standards are very, very, very high. So you have to do a whole bunch of due diligence, etc. on it. Now, how do you do due diligence when the owner of the assets, who is the one who has all the information and the likes of it, is not participating? Who are you asking critical questions and the likes of it? Unless you are part of a scheme to rip off the mine from the owners, and therefore you don't think the owners are relevant. You only deal with the acquirer. It's a very strange due diligence approach. And because of that strange due diligence approach, we determined that this was a matter in respect of our ongoing mandate to investigate multilateral development banks, which we've been doing for a very long time in this country. So the ECOWAS Bank angle, the event that was staged to allow ECOWAS Bank to make this announcement in a live dispute was so critical to us from a point of view of, the politics of it, that we thought we had to intervene. As I've tried to explain, when EBED says that the board of directors of EBED has approved the deal, that can only be at the end of a very long trail of processes. Typically in a bank like that, you have management, staff, sometimes even junior officers, then it gets to management. You have committees, risk committees. The management itself has risk committees, credit committees, investment committees. While those committees have done their work, etc., they present a memorandum that goes to the board of directors, which has another committee, the risk and credit committee in the case of ECOWAS Bank. They do further evaluation, and then they go to the whole board, which then does an approval. So you are telling me that despite all the information that has now surfaced, all those procedures went through ECOWAS Bank to the point where ECOWAS Bank was then convinced that they had to issue this statement. claiming the acquisition had happened. Well, we now know the acquisition has not happened because the shareholders have not sold. If this was not the kind of thing that a researcher who has an interest in multilateral development banks and has written extensively, my current visiting senior fellowship at ODI, that's been one of the first set of things that I've written about World Bank standards, IFC, etc., etc. You have a situation with mineral resources where CSOs are required to be at the table, and I have done extensive commentary on mining matters in this country, Ake, Talo, Atlantic Lithium, etc. Given this set of circumstances, how possible could I have been quiet? It's not possible to be quiet. Everything about this deal touches on extreme public interest. So now we'll start to tackle the disinformation that has been allowed to cloud the key issues. The first myth is that the investors have been sitting on the assets since 1992, which was in the Engineers and Planners press release, if you read it. Is it true or not? So here is the history. The people that are currently in a tussle with EMP are not the people who discovered the resource. They are not the people who started the process. Long ago in early 90s, in 1992, BHP did some investigation, and somewhere in the Wa-Lora enclave, they discovered a deposit called Kunche. So very, very long time ago. And then they didn't go ahead with it. It wasn't commercially viable enough. About 6 years thereabout, a company called Ashanti Iron Gold then discovered it, rediscovered it, and also did some work on it, and decided it was not commercial and didn't go ahead with it. Years later, a gentleman called David Harper, who has been in this country for quite a long time, and this person himself was in the mining services industry, was basically in the construction, mining and construction industry, decided that this was an interesting prospect, and he set up a company in 2004 called Eagle Hand, or thereabouts. I'm not sure exactly the period he set up Eagle Hand. And then through this Eagle Hand, which was registered in Isle of Man, acquired a company in Ghana, or set up another company in Ghana, which was owned by that company. And in the process, we had Azumah Ghana get set up. Why Azumah Ghana? Because this person was a big fan of our great Zunzum warrior, Professor Azumah Nelson. So that is why he named it Azumah Nelson.
Azumah Resources.
Azumah Resources, sorry. Now, the challenge with this is that typically when you want to go into mining, like most people, when you see an entrepreneurial opportunity, you don't have all the money. But mining is particularly capital intensive. So the process, and it takes a long time to actually develop a mine. So the process has been that you start, and as you move along, you bring money in. As the project is de-risked, as more gold is found and it's discovered that you can remove that gold at a reasonable cost and sell the gold and make profits. So in that process, they discovered that they didn't obviously have the resources, and they had to find the resources. To do that, they had to go to the Australian stock market, because it's not easy to get banks in Ghana to loan you for a project that takes 20 years. And I'll come to that also in a minute. So usually it's very difficult if you want to get into a large-scale mining to just move in and with all your money and capital just build a mine. It almost never works. The exploration, the prospecting, all of these things take time. And banks don't want 20-year projects, usually in this country. It's not very often. Occasionally, you may get a bank get involved in gold investment, but it's very rare. So they went to the Australian Stock Exchange. And the way that they went was that he had partners who were providing different kind of services to get the thing going, getting the licenses. Some of them had tenements, as what we call it, close by, etc., that you can put together to create value that investors will buy on the stock exchange. So they went to the stock exchange, and like I've explained, there were people in this country like Mr. Polamwakwata, etc., who were providing sweat equity in the sense that they were doing work for the mine, and because of that, they were getting equity as the thing was listed in the stock exchange. So on the stock exchange, eventually, this is the budget that they put out when they tried to raise the money in Australia, how they were going to use the money. So if you look carefully, you will see that exploration, the different places where they do exploration around Chiripong, Kunche, Nandom, all of those things were listed, administration, etc. And they needed $6 million Australian dollars, which at that time was, maybe $5 million, $4 million, think of the exchange rate that way. So this is the money they needed to get going. But remember, this money will not give you a mine. That's what people don't get. It's not like you go and get 6 million, you get a mine. You have to start building value, and over time, people will come in. So these are early investors. The people that are buying these shares that are issued on the stock market in 2006. So the listing began in 2005, 2006 was completed. These people were buying knowing that there's a lot of risk. So the people that started it, when the shares were distributed, you will see that they got about 1/3 of the shares, right? And then these people, who obviously are all foreigners, sitting in Australia, their goal is to bring enough value to investors, other financial advisors. Some of them are clearly working for sweat equity. So these shares were issued to a corporate advisor who has links, etc., etc. And once you've distributed and broken it all down, you get to 62.5 million shares. And the people that started the whole thing, they are getting 21 million shares, about 1/3 of the company. So this is David Harper and all his friends in Ghana, etc., who came together. So this is the original prospectus that was issued. And this was in 2006. So all the way through up to 2006, this is the first time that Azumah comes into the picture. But Azumah under this ownership. Azumah then continues onwards to do more discoveries. So remember that when they started, they had only Kunche confirmed. They discovered Bekpong. They then do a deal with a company called Crew Gold. And Crew Gold also was another struggling mine company. So Crew Gold decided that instead of continue to struggle, whether they should team up with these people and get shares in the company. So Crew Gold brings Julie and Jenny Josephine, which is their own discoveries that they had. Why are they agglomerating their discoveries?
Those from Singapore?
No, we are not there yet.
Okay.
So what is interesting, people don't realize, is that why are they doing all this agglomeration? The key principle of gold mining, or any mining really, is that if you're going to do a commercial mine, particularly a large-scale commercial mine, you need enough gold for it to be worthwhile. Because the investment to do gold mining properly is so capital intensive, hundreds of millions of dollars sometimes, that if the mine is not very big, what does the big mine mean? It means that the deposit area, thousands of kilometers, and then the actual mine that does the processing, significant enough to process that volume. So you need a large expanse, maybe 1,000 kilometers square, etc., etc. That large expanse and the rest of it, if you have only a small set of deposits, sometimes not enough. So you are doing your best to increase the volume. Why? Because when you then start doing 100,000 ounces a year, you want a mine life of about 7, 8 to maybe 12 years, etc., which is what investors want to see, because then they can get their rate of return. So this is all that is going on. Then somewhere around 2014, they start to, so if you look at this point, it started around 220,000 ounces of indicated and inferred resources somewhere in the 90s. By the time they took over, it had increased to about 500,000 based on everything that they knew. By 2010, just before 2010, it had gone to about 1 million. So they are discovering more gold. By 2013, it had gone to almost 2 million resources. What is a resource? A resource simply means that the gold is there, but you don't know if it's economical fully to remove it. When you know it's economical to remove it, we call it a reserve. So you are defining the reserve, and by this point, you now have some confidence to define a reserve, which at that time was about 600,000 ounces. You can see that by the time Ibaira, which is the current company that is in dispute with EMP, by the time they joined in 2017, the defined reserve was 600,000 ounces. This is a very important number because I'll come back to it. So first myth that we've dispelled is that they didn't come in 1992. These companies were trying to find more gold to make it commercially viable. These guys invest in 2017. They invest in 2017, and soon thereafter, the resource goes up to about 2.5 million ounces. And then around 2019, the reserve, which is the one that you are confident you can get, is about 1 million ounces. That means, therefore, that if you produce 100,000 ounces, which today, 100,000 ounces today, a year, today is about $330 million. You can do that for 10 years. So an investor now looks at that calculation, okay, then I can invest 200 and something million. You look at some of your expenses and the rest of the processing and all of that, and maybe you get a 20% return every year for about 10 years. Then I get my return back. 2020, they fully acquired it. So when they came in 2017, they invested part of the money to get the project still going, finding more gold, getting all the alliances and all of that work. And then 2020, they go to the stock market in Australia and they do a takeover. They buy all the shares that I told you were issued in 2006. So it's basically 14 years later that this company now becomes the full owner of Azumah Resources. And this company is called Ibaira Capital, which I'll come into in a minute. They set up a special company.
Primary investor,
that's the
capital investor
a fund
of the business.
It's a fund.
All right.
So Ibaira sets up a special purpose vehicle called Ibaira. Ibaira Capital Group sets up a special purpose vehicle called Ibaira to acquire all the assets of the Australian company, which owns Azumah Ghana. But that Australian company that owns Azumah Ghana didn't own Azumah Ghana alone. As I've told you, there are other people that had come in and the rest of it. So by that time, they set up another fund called IGIC, IGIC, based in Singapore, which then took the rest of the assets, the rest of the shares, so that this company, Ibaira, now owns 100%. So when you see IGIC, when you see Azumah Resources Australia, as the shareholders of the Ghana entity, know that Ibaira owns both of them.
That's right.
And then there were other projects, as I've told you, it's all about skills. You are looking for projects all the time. So there were other projects we call the Sankofa Gold Prospect, which were owned by 2 other different companies.
And Sankofa is part of this particular agreement.
It's part of this
with
particular
EMP.
agreement. It's part of
It's
this
not only the Black Volta.
It's not all the Black Volta.
Right.
And so the 2 companies are Upwest and Phoenix. And Upwest and Phoenix, as I'll show you in a minute, were also owned by Byra. So through the Azumah resources. And then by the time that we get to 2022, when they are really getting ready to build a mine because they think they have enough resources, they have hit 1.4 million ounces. And this has continued. Today, they are close to maybe 1.85 million ounces or something like that, because as you do more discoveries, it's improving. As the gold price rises, your reserves that are economical also rise. So you convert more resources to reserves. And the resource now, I think about 3.7 million or something like that. I have to double check. So all the resources that are convertible to reserves, that as you can mine profitably, will also increase as the price stays high. So this was a very detailed history just to dispel the myth that they just came in and blah, 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 and they have not spent any money. Also, they have spent about $40 million throughout the process to do the further work that will take the mine to the level of resource that is profitable. So this is all very important. Now, what is critical for people to bear in mind is that the gold industry or mineral exploration, prospecting, production, etc., is difficult and it's expensive and it's time-consuming everywhere. This is S&P Global's analysis of the average time it takes from discovering a resource or discovering some gold sitting somewhere and then being able to produce it profitably and sell. And if you look at it carefully, you'll see that the average in the world is 15.7 years. In Ghana, we have a mine called Akwase. Akwase was discovered, the main ore body, the main kind of deposit, was discovered in the 90s. And it was only, I think, around 2011 that the company called Viking made strenuous effort to try and develop it. They ended up not being able to build, do all the things that they need to do to be able to set up a commercial mine. And they sold it to the Chinese in 2015. So that is almost 20 years later, right? They sold it to the Chinese in 2015. The Chinese company was supposed to pay $10 million, some in cash, some in royalties, a whole bunch of complex arrangement. That money was not paid. So I think around 2017 or so, they took the Chinese company to court. It was only in 2023, from 2015 that they sold the thing. It was only 8 years later in 2023 that they managed to sort out that problem with the Chinese company. And that project is now about to be mined, and there's a lot of concern because the locals are calling the Chinese galamseyers and things like that. How long has that taken? Over 30 years. And that's Akwase, and the Viking story that we know. The same Chinese company owns Akroma and things like that. So it's not surprising that it takes you a long time. Why? The fundamental principle is that you need to aggregate the mine to an optimal size. If you don't have enough resource, you don't build a big mine there to mine and raise a lot of money to mine. It doesn't make sense. And that is partly the reason why, and obviously the infrastructure that you need in order to establish that you have a significant mine, is why we have a lot of galamsey, or one of the reasons. Because when you think of the model mine that the Minerals Commission has, what you need to do, very expensive. You are supposed to even have a clinic on the ground. And then you think of all the engineering, etc., that they require. If I have a resource that is the size of Kokomlemle, it may not be enough. If basically the ground on which the scattered deposits are, it may not be enough. So what that means is that a lot of people go into the mining sector unwilling to build a big mine. Right? To build a commercially viable mine. Then it becomes a question whether they will invest in the other ancillaries. You want them to do a proper dam. You want them to treat all the water. You want them to do this. Can they build that infrastructure if the mine is not very large?
Unwilling, or they don't have the finances because it's capital intensive?
It's capital intensive, but also what about the actual land?
Okay.
You need, if I decide that I need, for it to work, I need to sell $100 million of gold a year. How many ounces do I need? I need about 30,000 ounces. How much land do I need to get the 30,000 ounces? Will a small-scale miner be able to access that land? You understand? And if you have so many people who also want piece of it, bit and piece of it, how would they allow that mine even to emerge? So you're going to have to deal with all the encroaches. So a lot of people that want to make small money from gold and the rest of it, they are never going to be able to mine satisfactorily. So the notion of environmental compliance in that world is almost impossible. And solving that problem is the policy issue of our day, if you are really going to solve galamsey. And I don't think a lot of people understand the issues around the land scale and the optimal mine size and things like that. So all the things that you need to do in order to be able to mine properly requires a lot of money, which requires a lot of gold, which means that for a lot of the prospects that some of these miners can manage, they are just never going to be able to mine environmentally friendly. And that's why small and community mining has not always been successful. And some people have told you that sometimes when you go there, you look at the so-called community mine. What is the difference between that and the galamsey? It seems that one has a paper, a piece of paper. So we need to solve that issue fundamentally.
Right.
And that, there's a thing called Taylor's rule. I'm not going to go into it. That defines this idea of optimality. To find that optimality to move from reserves all the way to the lifetime of the mine to position it. So that scale is the issue. And that is why sometimes it takes time because you have to aggregate the scale before you're able to get to a point where the mine is profitable. So I've tried to explain, since they took over the mine, the gold that we know is there has grown from over 225,000 inferred resources to almost 4 million ounces in inferred resources. That's almost 20 times. And the reserves have grown from about 100,000, 100 and something thousand to what we know today to be almost 2 million, 1.8 something million. So the question you have to ask yourself is that even if tomorrow they decide they don't want to invest in Ghana again and they leave, what have we gained? We have gained knowledge that there's a lot of gold there and it's commercial. And all the work they have done over those years to give us that knowledge, which now sits in our databases, is valuable. In fact, part of what makes Ghana a mining jurisdiction of note globally, because we know there's commercial gold in place. Some of that work is investors drilling. For instance, in this effort to get this going, they had to drill about, to the first 1 million ounces that I told you, they had to do about 10,000 holes, drill about 10,000 holes in order to find enough resource to make it worthwhile. So in short, the argument that, the time it has taken, etc., they've been sitting on the mine, etc., is not true. They've been prospecting and exploring. And this has happened throughout the industry. I'm not making this case as if it's a special case for them. Throughout the industry, a lot of discoveries take many years to get to viability, and it's standard across the industry. So there's nothing there, is what I'm trying to say, for us to look at. So there are other issues which we are better off looking at. The other claim that has been made, and I've heard that made several times, is that somehow the Ibarra itself, the people that own it, there's some kind of split, right? So some shareholders are in dispute, etc., etc. So it's very simple. We just have to look at the structure of the ownership of Black Volta. So Black Volta is right there. Ibarra Capital Fund established Ibarra Capital Fund 1, which is a special purpose vehicle. They set up the IGIC in Singapore. The IGIC acquires Azumah Resources.
100%.
Yes, that's the Australian. They then acquire parts, because Azumah Resources own 53.5% of the Ghana one. They acquire the rest that they didn't own, and they now have 100% ownership. And that company is the one that has the license. But Azumah Ghana also owns Phoenix, and Phoenix has another license, which is another discovery, and they also own Azumah Metals, which I think is a trading company, it's another exploring company. So all in total, what is critical is that you can't ignore these people. Because when you work it, they own the assets. They Ibarra people.
I'm not supposed to intervene because you are supposed to finish so we have a conversation.
Okay. So
but when you mentioned that there is one license by Azumah and then another by Phoenix.
Yes.
In the correspondence I have read so far and documentation so far, it is only Phoenix that a license is attributable to.
A license is attributable to
only Phoenix.
You mean like a mining license?
That is right.
Yes, because some of it are reconnaissance, etc., etc. But they are all mineral rights of some kind. They give you a right to do certain things there.
Okay.
Yeah. So for the Walora area, the main deposit and the rest, it used to be a reconnaissance line for a very long time because they were not ready to move into mining because they were doing more discovery to make it viable. Okay. And also they were raising money. Let's be honest about it. So then the ownership structure is also very clear in the agreement that was signed between EMP and the company. So you can see that in the EMP agreement and the rest, all of it has been defined, who owns the Upwest one, what kind of rights they have, which is a prospecting license, some have a prospecting license, etc., etc. So all of those structures were very clear in the agreement as to how the power dynamic works. Also, you can see that like the same discussion that I had with you, the fund that created another fund, most of that money actually came from the US, all the way through to the point where you now have ownership of the mine through that integrated structure. So in short, there is no way you can have some dispute among some shareholders, etc., because it all concentrates at this Ibarra entity. And it's a fund. So it has a governance structure. It's not easy to go and do a coup inside the fund. It's much more complicated than that. And the managing partner of the fund is the one that in EMP's press release, they've described in all manner of ways, this James World Bank individual. You also see that when you look at all the people that did the signing, on the Congo side, which has the Sankofa prospect, the Caroline Baker was actually just a corporate advisor to Ibarra who signed for them. And everyone who signed on this deal actually just worked for Ibarra. So it's very difficult, when you assign a deal with the owners and you recognize that and you assign that deal, and all of that integrated structure feeds into Ibarra to claim that somehow there's some disputes among the shareholders. It's very difficult to justify. What is also not true is the fact that somehow they got the asset for cheap. They've done no investment and they are trying to flip it to a EMP for 100 million. And even that, they're not happy because there's somebody sitting on the side. They want to do even more. I mean, the simple fact of the matter is that you just have to look at the agreement and you will see clearly that a lot of the money was loans that had gone into the company to allow all this exploration work that I was talking about and its historic liabilities. So the 100 million that EMP was paying was not money they were going to pocket and they will go away. It was money mostly to pay for the loans that the investors had loaned to the company, which had been spent. So they were just recovering the liabilities that they had incurred in that journey. And some of that spending before they came in of almost 80 million, those investors more or less lost money. Because on the stock exchange, yes, they didn't buy it at 80 million or whatever. That those investors up to the point where they did the full acquisition had spent. So a lot of money had gone into it. Some people investors had lost money and left. And these people then coming in 2020 and spend more money. But they also inherit the liabilities. So the 100 million is not something they're going to pocket and go away. Okay. The other critical structure...
The agreement is very clear that EMP also assumes assets and liabilities.
Very good.
Debt. It actually uses the word debt.
Yes, and much of that is to go to fund the mine. Okay. Because they are still not done.
Right.
They've done all this exploration, but now you have to spend almost $200 million to do the further work that will make the mine possible. So when EMP comes on board, it cannot just simply give them 100 million, your debt and everything, go away, you don't make any profit, and that is it. EMP has to come and invest and grow the mine, and then it gets additional shares as the value of the company goes up because now the mine has been built, and that is the key issue. So EMP's attempt to say, take 100 million and walk away, it's not going to work because that's not how the deal is structured. The deal is structured in such a manner that EMP comes in, assumes the current liabilities and gets some shares, 1/3 each. And then as it builds the mine, the shares vest in EMP based on new shares issued. So it's a journey that they want to go with EMP on this. EMP adds value, the mine, the whole asset increases, EMP's ownership increases, 1/3, 1/3, 1/3. So EMP saying, I've got money from ECOWAS Bank, take it and walk out. It's never going to work, except they change the commercial intent that they brought to the agreement. Because the initial commercial intent was not like that. Okay. So, the $100 million that EBIT was going to provide and the $130 million that they are talking about, etc., will not do more than just simply pay the existing liabilities in the company. You still need to raise, at least in my view, working capital, construction, etc., at least another $200 million. Okay. If you are going to go and collect $100 million from EBIT to give to someone to clear existing liabilities and raise another $200 million, etc., that person wants profit on their initial investments, and therefore they want additional participation. So that's one issue. So it's very difficult for EBIT to come in, give 100 million to EMP to give to the company, and the matter closes. It will not work because the company wants to now make returns. You see what I mean? So that's the first problem.
Right.
The second problem is that even after EBIT has given money, that doesn't fund the mine. You need to get almost another $200 million to fund the mine. So, and we know EBIT's capital structure. We know the size of deals it typically makes. You need to bring in other investors, which is why you cannot throw mark at the project. If you throw too much mark at the project, investors will not come in to invest the money and go for it. And that is also why the case has been made that if we are not careful and it looks as if we have just strong-armed and taken that deal out of them, it might get difficult for the mine to ever be developed. And this is a part of Ghana, which is a new frontier for gold mining, Upper West. They didn't used to be known for gold mining.
That's right.
And now we are opening that up for them to also get jobs, potentially if it's mined environmentally sound, in an environmentally sound manner, for them to also get economic activity that is really good. So all these are very critical issues. Then the issue about where the split idea is coming from. Remember the earlier structure I told you. The mine was owned by Azumah Australia, majority share owned. Then they bought Azumah Australia in the stock market, the ASX. Then there were some people who also owned some part of the mine. So they created another fund in Singapore and bought the rest. And now they own 100%.
In fact, if you look at the agreement, there are 6 different entities.
Very good.
That EMP enters into the contract with. But you will obviously find eventually that you are dealing with ARA,
which is Australia,
and the IGIC.
Very good.
Right.
And IGIC, as I said, was also owned by Ibarra. Okay. But Azumah Ghana is a Ghana entity. It stands on its own. So even though you have these shareholders, you need to have human beings as directors in the company.
That's correct.
Good. Now, that is where the challenge starts to emerge, where the issue around the so-called boardroom split and things like that, which is accurate, start to come in. What happened was that here are the directors of the company as at now, right? This is very important. So you have Nana Jimo Bene, Noel Niado, James Warbank is the one that everybody keeps complaining about from EMP. Hector Ninaku, who was the secretary, Jonathan Hronsky, and Steven Zaninovich. Now, James is the managing partner. He's more or less he's a former BHC Fortescue person who was in mining, created a private equity fund to go into mining. So he is the managing partner. And then these other people work in the fund. These two, the first two, Nana Jimo Bene and Noel Ado, who are prominent Ghanaians, were nominated by EAP when they signed the contract to join Ibaira to develop the mine and clear liabilities. You understand?
Right.
So when they signed that contract, they said these two people will represent us. Why did these people allow them on their board? I mean, different people have taken different decisions. But at that time, EMP also wanted assurance that when we come in, we are not going to simply be your boy, right? We are going to be important decision makers as well. So if you are going to go on this journey, they want our people on the board. So these two people were nominated. But when you look at the structure very carefully, in Ghana, typically the secretary is not a member of the board. It depends on the bylaws, but typically the secretary is not a member of the board.
That's right.
These five are the members of the board. And these five, two are with Ibrahim Mahama, Mr. Ibrahim Mahama. So the board is split because he nominated those people, and there's no doubt about that because that has not changed. But the key principle in corporate governance is that usually the shareholders are dominant because they appoint the directors. So worst case scenario, you do an AGM and you remove the directors. And that is possible. Of course, now it's incumbent in the courts. So ultimately, you have to ask yourself, who has the ultimate control in this matter? And that's the ultimate issue in corporate governance. The other issue is that because of the way the thing was set up, and EMP was now responsible for the technical, because remember that the whole point was that EMP comes as a strategic partner. Right. That's the technical work, help raise money, and and let's not mince words. When, in 2022, when this thing started coming up, and we started having discussion, by 2023, the company was already had the prospectus out all over the world, praising the fact, or rather hyping the fact that they had a big mining service contract from Ghana involved, and therefore that de-risked the project, etc., because there's some kind of strong local participation and strong government endorsement. So the truth of the matter is that at that time, we were very happy to have EMP on board. And we'll discuss in a minute why that changed. But when EMP then came up and set up the bank account for the company, the newly reconstituted company, because the company now had a new board, etc., the bank account that was set up, only these two people were the signatories, the EMP people. So the EcoBank account that was set up to move the project for the joint effort forward, only the two people who are EMP people were signatories. And a lot of the spending that went through that account is what EMP is claiming is this 4 million in some documents and 5 million in some statements they've spent. So that money that they've spent, the argument of the other side, which I have cross-corroborated to a very significant extent, is that money has been spent on activities related to EMP. For instance, there is evidence that at the very least about $500,000 was wired to the law firm that is currently defending EMP. Is currently prosecuting EMP's case before the tribunal, the arbitral tribunal, in the courts in Ghana, which is this law firm, Robert Smith Group, owned by Mr. Bob Banson. So if you take just common sense, it's unlikely that such expenditure from the bank accounts could have been authorized by the Azumah side, simply because most of that work for that law firm has been in opposition to their interests.
But in the contract, in the agreement, yes, there are specifically detailed situations where certain expenses will be on the account of EMP, and certain other expenses will be on the account of ARG.
Very good. Now the challenge is that the ARG account was controlled by EMP. So when EMP said we spent this amount of money, they dispute that was spent in their benefits. Because that's most of those expenses that they have been able to reconcile, and I've seen some of those banking documents because we are also insiders in the bank. It does appear to suggest, and the issue about the law firm one is very clear, that it doesn't appear that wasn't to advance the project in any way. Okay, so that's the confusion.
So where are we now, and what's
how
the way forward?
So how we go forward is very simple. You just have to read the agreement very carefully, as you've done, and it's very clear that where they started with the agreement is not where EMP wants to go. Where they started with the agreement is that clear the liabilities that we have, almost 100 million, bring about 160 to 200 million more, depending on how it goes, an estimate. And based on that, we build the mine. But you build the mine. you enter into an EPC contract with the company to build the mine because they want to tie you to the cost. So when you say this is the cost, etc., you execute on that cost. And then secondly, they want you to do the civil works, obviously related to the mine. Now, if all of those things are done, you get shares as it progresses. That's basically the deal. So my view is that EMP has changed mind about that structure, probably because there's no more trust and the relation is not good. So if that's the case, they need a new agreement. Because the company purports to have terminated the agreement in December of 2024. And I've written to you, which we've seen, that they send you that termination. But before then, you had gone to arbitration to try and preempt it. But in the arbitration, you don't preempt termination and arbitration. In Ghana, you get an injunction, but that injunction just preserves the status quo. The injunction cannot force the company to continue to deal with you. It just simply freezes the situation as it is. But to go forward and build a mine and raise money and all of those things, there has to be a new agreement. And that new agreement must satisfy the commercial intent of the parties. What do they really want to do? Do they want to create a situation where they take some money from EMP and walk away? Or do they want to take money from EMP and still work with EMP to build a mine? We cannot have a situation where the two don't have a meeting of minds. That matter must be addressed. And they have to sit together and ensure that they don't further inflame the situation, which is why I think the event was totally misguided. Because the effect of the event was to do three things. One of them was to declare a fait accompli. Oh, we've acquired my end of story. Second, it does some very worrying things. It says things have happened that the other party who owns the asset has never agreed to. So it's a strong arming tactic. I've never agreed to take 100 million and walk away. I've not agreed for you to take the 100 million and then give it to me to walk away. I've said that raise the money on the books of the company, Azumah, Ghana. Not you take the money and give it to us to walk away. Raising the money on either you raise the money on the book of the company as the debt, or you borrow the money and you invest it as equity in the company. But until we see the money in the company, essentially a bank account that we control as controlling shareholders, we cannot consider the deal consummated. So if that is not what the expectation is, and you do a launch purporting that you've overridden that clear commercial intent, then you break trust. So the trust in the relationship is what must be repaired. And now that they are at arbitration, there are 3 legal proceedings underway. There is arbitration in London, which EMP initiated, and that was initiated before the termination. Then after the termination, they went to court to get contempt proceedings. And then after they did, initially before they went to court to get for the contempt proceedings, they had already also issued an injunction. And the injunction is to preserve the status quo. But all it does is that it means that nobody can move. So how do you issue an injunction saying that I don't want my rights to be prejudiced? And then you go ahead and make an announcement that you've acquired a mine and you have a financier, etc. How does that work?
You can interrogate that once you are done and sit down, because the injunction could be that they got the injunction, so they are able to proceed, unless the terms of the injunction say that both parties are stopped.
Okay, but the injunction was specific things the other parties not to do. The injunction was not an enabler for EMP to continue to do things regardless of the agreement. So we will read the injunction. So you have the injunction, we'll look at that. In short, you have a situation where there was a deadline for EMP to pay $50 million in 30th June 2024. They couldn't meet that timeline. They argued that the things they needed to do that was not agreed to by the other side. The other side said, well, that the term sheets you brought didn't meet the requirements, so I couldn't have accepted it. It was not what we had agreed in the agreement. There was also the EMP contract, which was supposed to be an EPC contract, engineering, procurement, and construction contract, which could not happen. And that is literally where we are. Now, why should we be more neutral and objective in this matter rather than just support the Ghanaian national champion, EMP? Sometimes tough love is needed. After assessing all the details, my conclusion is that it's EMP that has departed from the initial commercial intent, as expressed in the agreement which I've read. The way the agreement was structured, etc., it's not the way EMP is proceeding. And how do I know that? It's based on the EBIT signing ceremony. The ECOWAS bank signing ceremony purports to force the company to accept a fait accompli that departs from the clear intent of the two parties, commercial intent of the two parties in the agreement. And to my mind, that has inflamed the situation.
The agreement allows EMP to go look for loans, including from a place like the ECOWAS Bank.
Very good.
And they have done so. And in fact, you will read from the documentation that this party has been once involved in approaching the bank so that collectively they approach the bank to get the loan.
Very good. So you approach the bank in 2024, May, and you say, this is a project we have. A bank will normally do 2 levels of due diligence, right? One on the person borrowing, the borrower, and the other on the project.
Right.
The reason why the project due diligence itself is important is several-fold. For example, there are places and industries and contexts, etc., that ECOWAS Bank is not allowed to invest in. They're not allowed to invest in, for instance, banned pharmaceutical products. They're not allowed to invest in diamonds for which a country does not have the, if you are mining a country that is not part of Kimberley process, ECOWAS Bank cannot invest in that project.
Right.
So the project due diligence is very critical. And in this case, when they decided to invest in the project, they issued a term sheet in May 2024 to the company through their client, which is the EMP. Their client is EMP, so that's understandable. The company looked at it and said, doesn't meet the agreement we've signed with your client.
Okay.
So we cannot proceed.
Right.
So my argument therefore is that so long as that was the history, it's very bizarre for there to have a situation or for there to be a situation where then they proceed to go and announce a fit and complete takeover.
Okay.
That would merely inflame
Thank you very much.